Good afternoon, everybody. My name is Charles Potts. I'm the Executive Vice President and Chief Innovation Officer with Independent Community Bankers, and I have the pleasure of moderating this panel today as we talk about building future-proof financial institutions. And the real pleasure of this is we've got practitioners from kind of all ends of the spectrum here when it comes to this conversation. So real briefly, we're going to kind of jump in real quickly, and I'm going to start with you, Alex. Just a brief introduction, TrueNorth, and kind of your role and what you guys do.
Sounds good. CEO of TrueNorth, Alex Gonikman. TrueNorth is a technology services provider. Basically, what we do is we work with digital banks, credit unions, community banks, as well as fintechs, and really help them when it comes to designing a future-proof solution. The essence of TrueNorth, we've been around for about 10 years, and so what we've done is we've taken our expertise when it comes to building fintech platforms, and now we're transitioning that to work with the community banks and credit unions out there today. So excited to be a part of the panel, Charles.
Welcome. Brandy, the banker in the house.
Yay, banking.
Woo! Woo!
Yeah. All right, I'm Brandy Young, the COO of Retail Banking for TBK Bank. We are a community bank with 63 branches across 6 states. We serve our markets in those states, and we also serve the transportation industry. I'm also excited to be here on the panel.
Yes, welcome. And where is TBK, by the way?
We're headquartered in Dallas, but we operate branches in Iowa, Illinois, Colorado, Kansas, and New Mexico.
Awesome. And Rhett, LoanPro.
Awesome. Rhett Roberts, co-founder and CEO of LoanPro. We're a loan servicing software. So think of the tech stack that you need for everything from the point of decision on a loan through the rest of the life of that platform. So we've been around for a number of years. Our whole journey is about 18 years in total. And we're really excited about the opportunities of helping future-proof what's happening in the ecosystem for loans and banking in general. So we had an opportunity early on when we were one of the first 100 companies on AWS. And just kind of lucky in our timing with that. And we've had a variety of iterations of building out a platform and a tech stack that allows our customers to launch these different kind of lending programs. About 1,200 customers across the US and Canada.
So let's build on top of that narrative a little bit and start with kind of unpacking what future-proof a financial institution means. And we're going to start with the financial institution representative here. In our previous chat, we've talked about a lot of the initiatives, but for the audience here, from a banker's perspective, what does future-proof mean to y'all, and how do you view this as part of your strategy?
Can I ask a question of the audience first? How many bankers do we have in the room?
Oh, actually, a great. All right.
All right.
Let's hear it for the bankers. Woo! Salespeople, they're your bankers.
Fantastic. I just want to know who I'm talking to. So one of the things that I heard today was quite a bit of conversation about competition. How can fintechs compete with financial institutions? And I just want to change the narrative a little bit in that we both have a really compelling offer to one another for how we can future-proof financial institutions and just financial services for our customers. Banks have deep pockets. We have a very loyal, strong customer base. We have a lot of information about our customers. And fintechs have creativity, agility, and they're very focused on the customer experience. And so when you bring those two together, it can be really amazing for both. And that's what I'd really like to see. So when we think about future-proofing the financial institution, there's just this really strong pull for customer experience right now. Customers like digital services. They like the ease and convenience of things. Banks are more traditional, less adaptive to that kind of niche experience that you want or something that's bespoke to each one of your different markets. And by partnering with a fintech, you can deliver on that. But really, at the end of the day, we want to think long-term, what's the big picture? What's the big, hairy, audacious goal? But then what's the goal right now to get us there? What's the milestone? What are the steps? And so you've got to be proactive in your planning. You've got to think about where you want to be. And I think step one for future-proofing is just being here, discovering what's out there, what's possible, what's available, and then taking that back, socializing with your C-suite, socializing with your operations team that would be the ones who are working on it. And then being creative yourselves and what you want to deliver, and then having your long-term plan, and then what are your milestones along the way. So that's it in a nutshell.
No, that's perfect, because it leads into really the conversation of the journey when we talk about future proofing. Alex, how do y'all work with your clients to take them through this journey?
Yeah, great question. So for us, it's similar to what Brandy said, which is start with a customer-centric mindset, right? And at the end of the day, prior to digging into technology and even thinking about writing any line of code, is really understanding how to build this composable solution where you can basically not pigeonhole yourself into a non-future-proof solution. So for us, it's starting at the high level, understanding what are they trying to build. From there, really going deep into the architecture, the design, and then from there, being able to provide the solutions for the clients. And the beauty with what we've been doing is we know fintech from a ecosystem, right? There's a lot of opportunities in fintech for, say, if you're trying to do KYC or payments or whatever it might be. So instead of trying to build everything from scratch, what we like to do is really focus on that composable architecture that allows us to bring in the pieces. So in that way, you're not trapped into a particular vendor, and you're always able to, switch vendors based on what's out there, and there's a lot of them. So we also like to provide that expertise of our vendors, so that way we can pick what works based on what your challenges are for the bank.
And I know optionality is critically important and something that that you guys focus on relative to this. How do you address this with your clients?
Yeah, great question. So I fully agree with this model of optionality, where if you have the example of KYC, instead of hard coding up to a single vendor in the process, it's more of a slot that you need this function done. And then you have the flexibility of who you might want to slot in there. What we've done, think of us as the lending core. We've done that same model where you really have to go at it from a compliance perspective, right? And I've mentioned to many people in conversations today, compliance is the word of the year, and a huge, huge focus on that. Well, I think that's some of the hesitation of adopting new things, is that the compliance is kind of complicated. And even if the rules don't change, which they probably will continue to change, we all know there'll be an increased level of scrutiny. And so it's a matter of making sure that everything involved in that stack is going to adhere to the compliance. And so it's not just a matter of breaking your pieces apart for the tech stack, but just making sure they play nice together. So an example, our background, the reason we started the software business is we were lenders ourselves. We had a portfolio in auto loans, and we had a lot of difficulty because you needed 6 or 7 different pieces of software that didn't actually talk to one another. So you'd have one system that's a CRM for customer communications, keep track of your customer, another system that does your contract generation, and another system that does your amort schedule, and another system that processes payments, and so forth, and they didn't actually do all their math the same way. And it created kind of a nightmare of how you do that. So as we're taking that vision and what was talked about here of if you're designing a new product, then you need to sort of figure out what is that product, what is the customer experience that you're looking for. And then in the future proofing is if you wait until you have everything 100% figured out before you launch, then it's probably not going to be a super profitable product to do in the beginning. And so it's a matter of try fast, make sure you're covering the compliant side to it in a way that you can iterate and adjust with this concept of step by step, putting different vendors in the slots as necessary.
And Brandy, I mean, you guys are a very innovative bank and take this to heart, trying lots of little things. I think we jokingly said you're the Mikey and the Chex commercial here. That you given a lot of stuff to try. So how do y'all culturally and structurally organize to really address this challenge?
I'm really glad that you asked that, because not every institution is going to have the bandwidth to have a dedicated team. And so we have several different avenues to receive new ideas and new concepts. So we have a product officer, so an individual who goes out to these different fintech conferences and other places like that and sources new ideas and new concepts, brings that back to the team. But we also have open channels to get ideas and concepts from anybody within the organization. So we have what we call our Retail Innovation Council. Anybody can submit an idea there. We also have, just in my office, what we call an innovation wall, where we just write ideas up there. Hey, this is something that we think our customers want, or that is kind of hot in the market right now, something that intrigued us or piqued our interest. And then we say, is that something our customers want? Because you've got to start there. And then we start looking into it to say, is that feasible for our organization? Is there somebody that we could partner with to deliver that? And so I would say be open to ideas coming from any source, because a lot of times the people that work in the front line for your organization understand best what your customers want, or they're even customers themselves, and they know what they're excited about and what they're interested in. So be open to getting ideas from anywhere, really. And then secondly, I would say, if you've come here, and I know we had a bunch of bankers in the room, a strong concentration right there, and you go and
They're
you
all
talk to
clustered
somebody.
together. Did you know they're all clustered together?
If you come and you're talking to somebody at a booth and you think that solution, while it's intriguing, isn't really something that I see for my organization, I want to encourage you to really dig in, because it takes creativity on our side and on the side of the fintech to see how can they best meet the need that you have. And what I discovered is just today, I was talking to a provider that really had their solution positioned for a collections activity. And I said, I can use that for my deposit accounts, right? So it's having those conversations, engaging. And then last night at dinner, I was talking about something that I'd really love to see in this space, and talking to TrueNorth. And one of the guys said, hey, we kind of like to build that. So you never know what kind of partnerships you'll find here.
Well, so one of the things we do at ICBA, we have an innovation accelerator program called Think Tech, and it's working with bankers to really find new solutions and new ideas and help bring them to market, so that you as bankers can really kind of expose yourself and dip your toe into the water and uncover these kind of things. And as we have shared collectively, and no offense to some of our partners in here, but a lot of times this is driven by a lot of banks basically saying, gosh, I need to get away from my core vendor. I need more flexibility. Alex, from your perspective, when you start with your financial institutions going down this road, what are some of the elements that you need to make sure they consider when looking at kind of opening up access and creating new solutions?
Great question. So for us, we never go into a situation where we're trying to do a rip and replace type of method. It just doesn't work. It's too destabilizing for the business. So a lot of what we do is we have this process, we call it a sprint zero process, where we know that the bankers know what they want. It's really trying to figure out how they can achieve their goal without disrupting the business, right? And so we try to spend 2 to 3 weeks with the team, between our team and TrueNorth and between the bankers, really understand what are you trying to build, and then from there, taking that back and really putting all the effort on our side to make sure we can present something that will do what they want at the end of the day, but also keep it so that the bank is not disrupted from doing its daily work. So it's really trying to make sure that, let's not talk about, we want to rip everything out, because it's very hard to do that with existing cores, but try to build something on the side. We like to call it a sidecar approach, and see how we can integrate that within the existing cores today.
And how does that influence a product roadmap?
Yeah, it's great. So on this, I want to answer one of this, add on a little bit one of this question earlier. How do you incubate an environment for innovation? Loved the answer. Basically, everybody's involved.
Yeah.
Right. I want to give a real specific example that's jumped in my head. So we had a bank that had a large contingency of teachers. And they received an idea from their customer, and it was actually from a teller that they would come in to the branch, and a teller noticed that during the summer months, this particular school district had diminished pay during the summer. And not all school districts work that way, but this one, the salaries the teachers would get in the summer was smaller, and they had a lot of customers complaining about, hey, it's really hard to make all my payments during the summer because of diminished pay. So they actually ended up designing a product on our system that was aware, like they knew when they underwrote them they were a teacher, they knew they had the volatility in the income as well, but then sort of gave them a plain vanilla straight amortized loan, knowing that it would be hard for them during the summer and just figure it out. So instead these guys said, hey, here's an innovative idea, builds a lot of credibility with the contingency of the teachers of why don't we, since we know we're going into this, why don't we have the payment amounts adjust during the summer months for them? We're still accruing the interest. It actually significantly decreased delinquency rates on the portfolio. It's a better portfolio for them. And so it's not like huge leaps and bounds of innovation. It's sort of common sense things that a lot of folks have felt handcuffed in the past. They're like, hey, I know I want to do this, but how am I going to do that in my core? Their system didn't support that. So we've built out a lot of really customized programs like that that support this level of personalized finance. And the idea is really try to solve that problem. There's no good regulatory reason or compliance reason you can't do that. But there is an operational reason. If your core doesn't support that, it's really hard to do. It's a challenge. So we've worked with TrueNorth on a number of deals, I think the idea is sidecar is best. I would like to triple underline, rip and replace is very complicated, and it only works if someone's up against like a real hard wall, like you have the retiring of a tech stack or somebody's going out of business or whatever. We've had to do a few of those where an auto lender, they had a portfolio and their provider was like a old school platform that they were hosting it in a remote cloud server, and all of the system got hacked. And so they had a 24-hour period they could extract data down into CSV files, and then it's gone. And so they were freaking out level 10. So you have to do that occasionally, but hopefully you get ahead of the ball on that where it's not going to be an issue. So we do a lot of sidecars. And what's common is a lot of folks have a tech stack unique to the lending product anyways. And so we sidecar in and then expand for them. So I think that's a clever idea on how to kind of thread the needle of innovation and try things out without introducing additional disruption to the core operating business.
Well, it dovetails really well with something Brandy highlighted, and it really was the underpinning of our previous dialogue about making sure your roadmap is flexible, and that is talking to your customers, listening to them, asking what they need, and adapting your solutions to meet those needs. How do y'all, Brandy, how do y'all approach kind of the fluctuations that are happening in the marketplace? I know we've talked about some of the volatility recently, and we're all laughing that it's a deposit frenzy right now. How does an organization like yours spin up to move quickly in these kinds of situations?
That's a great question. My first answer would be, if you're just now planning on how to respond, you're too late. So we just got to let that sink in. I know with fintechs and the conversation that we're having today, we talk quite a bit about being able to pivot, being agile, but it's so important in banking. One of the key elements is confidence and trust that our customers have in us, and that's built by years of solid performance and in our communities and our depositors feeling safe. So there should have been planning along the way for how you deal with different contingencies that can happen in banking. I would love to circle back on the sidecar core because I think it's just so key to the conversation that we're having. And banks aren't going to have a lot of appetite for rip and replace, because if they do and they replace with another one of the top providers, then they're going to be subject to the same constraints that they are today. Who loves their core? Nobody raised any hands. I can't see very well, but I didn't see any hands go up. So the concern would be jumping from one to the other, and then the reticence to move to a custom core would be, I don't know that we're prepared for that we have the right skill set or the right team for that. So banks can feel very constrained when it comes to this very key element for how they do their business and how they deliver. And the sidecar core is you maintain your existing core. Let's just talk about what that means for a second. You maintain your existing, you bring up another one, the sidecar, and you choose your business that you're gonna run on that sidecar. And you build success with that. And you have really good experience, and you deliver something amazing to your customers, and you teach your team how to operate it, use it, support it, and you get everybody bought in on the optionality. And we talk a lot about, hey, we want to get best in breed. We want to use LoanPro. We want to have this ability to do something that's custom, but we can't. You said your customer couldn't with their core system. The sidecar core allows you to do that. And you can just take it, and it's like Lego bricks. You can just build and build and build, and you can start planning 2 years in advance, 3 years in advance before your contract's up on that current core. And then you can be very intentional about the decision that you make going forward after that.
It's a great point. The general thought has been doing nothing is a low level of risk. But that's changed, right? Doing nothing is a fairly significant risk to be taken. And so we see a lot of people making innovation, and this has been one of the most successful ways to do it is in a sidecar. And you try it out, and you can iterate, and you can tweak, and then once it proves successful, you can then expand as necessary. It's a great strategy.
Yeah, I think one thing to add for when we work with clients, it's the sidecar approach, why it works really well is because of the destabilization, right? You're not trying to destabilize what you have today. And so a lot of times you have to build that trust, especially for what we do, which is provide a service. So instead of trying to go in there and trying to build something that's going to take months and months and potentially years, is work with the bank, understand maybe there's a new business line that they're trying to do, and potentially build that as a sidecar solution. But it's all about making sure from a banking standpoint, and we're not bankers, we're engineers, but at least from what we know is keep that confidence level, that trust of being able to build that sidecar, but also making sure that they can do business as usual. I think that's a win-win in most cases.
So one of the classic definitions of future-proofing is to prevent obsolescence, right? So when you think about that from a banker's perspective, what are the things that y'all are very thoughtful and intentional and conscious about avoiding or not tripping over as you kind of move through this journey? Told you I was going to put you on the spot with some questions.
Okay, so everybody knows what's going on in the banking industry, and there's a lot of focus on capital. We can all agree on that. I would argue that confidence is more important than capital. So the biggest risk for a financial institution, for a banker, is the reputation you have with your customers. You have to protect that with everything that you've got. Because in times like we have right now, the way you're able to weather that is because your customers believe in you. They have confidence in you. They have trust in you. And that's it. One of the things, I mean, it's not a popular thing to say. Nobody wants to hear it, but no bank can withstand a run on the bank. It's not a thing. And the way you don't have that is you have trust and confidence. So everything that we do as we look forward, the thing that we want to be careful about not tripping over is having a bad customer experience or failing our customers in a way that hinders or reduces that confidence, because that's the worst thing that we could do.
I think there's a compliance side to that as well.
Excellent.
So I think the idea, this confidence comes from both sides, right? Failing to innovate, as your cohort of your customer set adjusts, they have different expectations, as well as the rules are changing constantly. And so the tech stack that you're using or the products that you're exposing to your customers need to be agile enough that they can adjust for the increased scrutiny and potentially rules to be changed so that you're ready to pivot quickly. We've had almost every week for 6 weeks now, suggested new rules to be changed. And so the pace that this is
We're
happening.
keeping real busy in Washington, D.C. right now, yes.
So I think that's just super important. It's not only innovate because you have a cool idea, but innovation is now required.
And I think one thing to add is it all has to stem from building a composable architecture,
Yes.
right? Because in that way, as regulations change, as new rules are coming from Washington, there's products that are going to come to market. And so if you're hopefully not building yourself into a corner where you're stuck with what you have, and build something that'll let you be a little bit more flexible. It does take time to take pieces out of the puzzle, but at least you don't have to rebuild it all, right?
Yeah.
So you used an interesting term that we discussed previously that not everybody may really understand. What is composable architecture, and what's its intended use?
The main thing for the way we see it is building that underlining framework that'll allow you to use that fintech ecosystem to bring on the right vendors. For instance, LoanPro, from a loan management servicing standpoint, you have other vendors out there. And so for us, what we like to do is build that framework, which we call a composable banking framework, and then bring in the necessary partners based on the type of product that you're trying to build. So it really starts at building that architecture and that framework underneath, and then from there, based on that, you can build the necessary pieces to whatever you're trying to build out there for the bank.
I'll give you a real world example we've seen. So most tech stacks have vertical integration in payments for both the wallet and the processor or move money in the real world. Those are mixed into one solution. And many of those solutions, if you're going for cards, you need to have PCI compliance for those and tokenize the way you save those profiles. Well, if you're a non-FI and you're not have direct access to the network, you're going through an intermediary to move that money. The difficulty is if you fully marry this partner and then you want to move, maybe their underlying bank loses the confidence and tolerance for your customer set, then you can no longer move money with those customers. And so you're like, all right, cool, I'll move to somebody else. And they're like, oh, I can't give you your payment profiles. You have 200,000 credit cards on file that are tokenized that you can't port. Well, you're like, well, now I have to go back to all my customers and capture my profile again. So something we did that supports this architecture structure is we pulled the wallet one layer out from the processor. So we tokenize and save the wallet in profiles in our system, hold the PCI compliance, keep our customers outside of scope, and then integrate with a library of processors so you can process the money with whoever you want, and you're not required to be just working with a single vendor in that process.
Going back to the beginning of this process, how do you ensure that you're not just, as we discussed earlier, replacing one constrained solution with another? Let's start with you.
Well, the way it was explained to me a little bit different than how Alex explained it, because I'm not really a technical person, is that with this solution, with the sidecar core, you build an orchestration layer. That's what we call it. The core connects to that, and then all of the other solutions connect to the orchestration layer. Nothing connects to one another. And what that allows you to do is plug and unplug. So to just expand upon what you're saying about the scenario with the cards, is it would work that way across the board, right? Yep. So no matter what solution you're looking at, and that's where you can go out and you can shop. You can shop with all your money and you can get the best thing off the shelf and you can bring it back and you can use it. Because right now, your first question is, well, do you work with this provider? Oh, okay, you don't? Okay, well, pass. And then you go to the next booth, right? Well, do you work with this provider? No? Okay, well, pass. Because this orchestration layer and this setup, it gives you all that optionality. Suddenly you don't have to ask that question. All you have to do is go back to your provider and say, I'm going to partner with this new provider, and I'm going to offer this solution to my customers. Help me make that work. And it doesn't have to connect to any other service. And then if somebody's failing you, like this one's not working for me, I thought it was best of breed, we get it delivered, it's really not working the way that we thought it was going to, just get rid of it, right? And then find something else. And you can do that with the core as well. That's the beauty of it, right? So even as I'm talking about that, I guarantee you the bankers are still thinking, hey, these are all the things that we plug into the core, but we're still stuck with that core. Not in this arrangement, you aren't. If that core isn't meeting your needs, then you can change it.
The history lesson's super interesting to think about the digital banking transformation that happened. To significantly oversimplify it, right? There was the core, and then folks said, hey, I want to go ahead and deliver my products via the internet or an app. And they're like, I can't really communicate with the core. So a bunch of folks popped up to be an intermediary in between. And some of those popped up creating a customer portal, and they built the back end to communicate into the core. And then they started to have requests of, I want a certain feature. And they're like, well, the core doesn't support that. So they went out and found it somewhere else and sourced it. And now you end up with this concept of the digital banking that's completely separate from your core and only some of the data flows into it. Well, it's very interesting. You move to digital banking, but your back office is still analog. So this new model really is the equivalence of the digital banking transformation that happened on the front end, the application and the user experience. We're doing that now on the back office in the same way.
So taking all of this and help paint a picture for the audience, Alex, of what good looks like, what some of the best practices are that you've seen that help banks really evolve into this future-proofing state of mind.
You got to stratify it: good, better, and best.
Yeah, exactly. So I think, I guess going back to how we do things, the goal is to, like I mentioned before, is not put a bank into a situation where it's stuck with the design. So really for us, that's why we spend a very lengthy time talking about design of the solution, because until you get that to a point where you're confident you're not going to put yourself in that situation where you're stuck with what you're building, then you're going to be in, in the same situation you are today. So for us, it's like I mentioned, is spending a lot of time with the business side, really understanding what are you trying to build, and then from there, working hand in hand to try to design that solution to be able to have that orchestration layer that'll not get you in the same situation that you are today. Hopefully that answered the question.
Great answer.
I was going to add to that. I was meeting with a pretty large neobank this morning with their CTO, and their revenue model is to make money off of the interchange, and we know that's not a sustainable business model by itself, and they're then trying to add lending products. And the system they designed doesn't allow them to jump over the wall and do lending products very well, right? It's a little more complicated than it appears at the surface level when you have a lending product that's interest-bearing and all your corner cases, and if they're consumer compliance, what do you do in bankruptcy and SCRA and all these corner cases? So I was having a conversation with them that they basically can't use the system they built that was focused on a deposit account and a debit card. It doesn't turn well into a credit. So I would argue that the key thing to look for is optionality and flexibility. Don't shop for what you want today only, but imagine the art of the possible. What might you want, and does it make sense? If you want that thing, does this not work for you anymore? And so it doesn't, not that the vendor needs to do everything in the world, but are they going to stop your ability to do the art of the possible? And it's a little tricky, right? Because you don't know what you don't know. But you do know you can try what you do today and see if it's going to support that, and then throw on some like logical things to step one layer out, like the example of the teacher. That's not crazy, like ingenious or a really novel idea, but not a lot of people do it. And so you can really just think about a couple of examples of what will help you provide whatever the goal is. A lot of folks are focused on personalizing finance, and that builds this loyalty and trust and confidence and why they keep coming back to you.
So you've got to be nimble and you got to think innovatively. We've got a lot of bankers in the room who are probably sitting there thinking, I can't do that. But how do they get started? How did y'all come to really embrace this?
Well, first of all, we had a need that our current technology couldn't respond to. And I think that's probably a similar boat a lot of people are in. very fortunate that I work for a financial institution that is innovative. So I can't say that I did anything to help move the needle on that. The needle was already there. But if you're in an environment that's not as open to innovation, and this seems like a pretty big pill to swallow, what I would say is, first of all, identify your need that you can't provide today. Because if you can, then, I mean, you really don't need to undertake such a big project. But really, what is it that you want to do that you're constrained from doing? What solution could you be providing to your customers that you can't today? This teacher example, phenomenal example. And then you need to be talking about those use cases, socializing that this is not an unsolvable problem. I think that's what people look at it and they think this is unsolvable because we've been so tied into these core providers for so long. And now there's an opportunity to stretch and get away from that constraint. And then go back to your people and ask them. Because again, this idea came from the people who work there. So you've got innovative people, whether you know that you do or not. It's about just allowing them to have their voice heard, and then your first reaction can't be, well, we can't do that. It's got to be, we'll look into that. We'll think about it, and then look into it. Talk to people who know. We didn't know the answer to everything. We knew what the problem was, and we had an idea about a solution. But then we're not technologists. We're not the true innovators. We talked to TrueNorth, and we talked to some other providers, and we had creative discussions before we settled on what we wanted to do.
Excellent. We've got just a couple of minutes if there's any questions out there for our panel. Anybody, any bankers in the room? Don't be shy. If you got a question about future-proofing your digital...
While we're waiting for that, I got an add-on here. How do you continue with this innovation? How do you get started? I think it's really interesting. Let me spin a little bit. Who do we sell to? Because the reason people buy things is they're hiring a job to be done, right? They want to achieve something, and it's pretty straightforward and easy for us to sell to like a chief compliance officer, right? Everybody's like, man, I have my day job, and now I got to do all these things for compliance. If I could just get rid of that friction and streamline it and clean it up, like everybody's happy in that process. But we also sell to like a head of operations. So whoever's going in saying, I need to increase portfolio performance, the collections, the servicing, I need to be more efficient with my head count, I need to do call interception or deflection and have a faster response time in engaging with my customers, and those things. So I think look for where friction is, both internally and externally, and that's a good place to look to innovate. And so look for what's painful. People pay money to reduce pain. That's just a fast, easy place to look for where you can innovate.
Yeah, and one last thing I want to add, what Brandy was mentioning, is that the bank knows what they want, right? And at the end of the day is work with providers out there. Don't try to think that you're alone and you have to figure out how to implement those solutions. That's what companies like my company, as well as what LoanPro offers, is that there's tools out there that the banks can start using, and there's certain cases where you just don't know what's out there, and that's why you want to come to the people that have been doing it and ideally help guide you in those journeys. That way you're not sitting there thinking it's not something we can do because we don't have that technology today in-house.
Any takeaways for the audience, Brandy?
Just be open-minded. And if you're here, you are. I feel very confident about that. So just final word, and I know I already said this, but I just want to encourage you to go out there, talk to the different providers in the booths, and really hear their offer, maybe not the way that they position it, but their offer, get to the root of that, and then see how could I put that to work in my bank? How can I use it to solve problems or create a great customer experience?
Final words, Rhett.
Great.
I think it's an exciting time, right? We see a lot of things changing, and this provides a great opportunity. I listened to the last 3 or 4 minutes of the panel before us, and the conversation was a little bit about talent retention or acquiring the right talent within your organization and then keeping them. One of the things that's also a tool internally. How do you keep people engaged and interested to keep working for you? Well, put them on fun projects. Do something innovative and interesting. So it's not just how you're serving your customer, but it's everyone who's all stakeholders. It's how it works with your employees and your customers and everybody that's involved there. So I think it's a super exciting time to be doing this. And just a big shout out and thank you to everyone who's in this ecosystem creating this opportunity for us to do it together. We certainly see the volatility that happens in the market, but we can get through this and we can win it together.
Awesome. Well, thank you to my panel, Alex, Brandy, Rhett, to the FinTech Nexus folks for having us today, and for all of you in the audience, thank you for giving your time to listen to us and to our panel share their insights on this very important subject. Cool. Thank you very much.
Thank you.